Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. It is May 31st, 2024, and I'm here to bring you some trading levels in some popular individual company stock symbols for the upcoming week of June 3rd. Uh, Before I begin here, the usual disclaimer, Precision Trading Labs, we are neither money managers nor financial advisors. Nothing I'm going to present here is construed as investment advice, and everything that I do here is for informational and educational purposes only. And what we do is, of course, help our subscribers to become profitable, competent traders. So, taking a look here at at Microsoft here, and in fact, Microsoft is actually a good mirror for the broad market here, because this is pretty much exactly what the chart of the SPY and the Q looks like as well. Right here, here was our close of last Friday. This week we actually had a short week for the Memorial Day holiday earlier, so there were 4 trading days this week. So this was last Friday's close, and we're looking at a 130-minute chart here. So there are 3 candles here per day. So there's Tuesday, Wednesday, Thursday, and then today, Friday. And you can see pretty much it was a down week into this morning. And then or basically this afternoon, we ended up getting this rather robust bounce out of here. And so what happened right here is, in fact, it actually hit both on the Qs as well as the IWM chart for the Russell 2000, and as well as Microsoft. They all hit demand zones over here. And so right here we have a rally-based rally formation. And right in here, if we think of the shares that are acquired by willing buyers, we can think of that as demand, and we can think of the shares that are offered by willing sellers as supply. So right in here, supply and demand are in balance within this relatively narrow range. And then what happened was we had an exhaustion of an exhaustion of sellers here. And what happened was willing buyers had to run up the price chart until they encountered willing sellers at higher prices. And so these trades occurred. Okay, and then when price returned to this region, what happened here was where you had supply and demand in balance. Once it went out of balance, what was left in its wake was only demand. And so when price returns to a demand zone, quite often you will then see another round of buying there, as there is still upward price pressure that's waiting to be tapped. And so that's what happened over here. Okay, and so price returned here the next couple of days later, after this demand zone formed, and we got that rally out of there. And so, because of the fact that price did not drill into this with any great significance, either in terms of time or in terms of the depth of how it drilled into this zone, it was quite probable that this level would then work again. And in fact, that's exactly what it did. It drove back here. It actually drove pretty much all the way through the level, but then it rebounded nicely out of it. And so this is where one could express a bullish trade. And so one could express a bullish trade. Obviously, the most straightforward way, of course, would simply be to buy shares of Microsoft. And of course, another way to express a trade out of this area of demand, and we think of this as a demand zone here, one could, of course, buy a call. Okay, so right now, if we look below here, okay, this is no longer an area of fresh demand. Okay, this was an area of demand, but it's now been tested twice. So we can think of this as tested demand, and really, you can almost think of this now as support. So when price returns here, could we get another bounce? Possibly, but from our experience, more often than not, this level will probably crack. Okay, if we end up getting pushed back here, particularly if it comes back here with some energy, this level will probably crack, and then at that point, then the next area of demand is sitting right here below. Okay, so in terms of the distance from where we are now, this price level down here at around 398, that's about 4% from where we are now. So we would need a 4% pullback down here, and then would be an area where we would express a bullish trade, and in terms of from Microsoft. And so again, one could either buy a call, buy the stock, and of course the other way, another simple way of expressing a bullish trade out of this level here would be to sell a bull put vertical credit spread, and one could actually collect premium there. So that'll be another way. So this is an area of demand here. Right here, supply and demand was in balance, and then again there was an exhaustion of sellers, and that left in its wake demand, because basically what happened was supply and demand were in balance. There was no longer any supply, and so we think of this here as a demand zone. Okay, so that's where we would express a bullish trade here, and then above here, this is an area of where, and particularly if we look at this in the 1 hour chart here, and if I just quickly flip over to that, we can see this is a base drop formation here. Right in this region here, supply and demand were in balance, and then right here there was an exhaustion of buyers. Okay, and essentially what happened was, if people that wanted to sell, they more or less had to run down the price chart until they found willing buyers at lower prices. Okay, and so what was left in its wake here, where supply and demand were in balance here, once demand left, all you had left was supply. And so right here, this was a supply zone. That's here. So one could express a bearish trade out of that supply zone there. So right here on Microsoft, we're sitting about 1% below that region here. Okay, and in terms of the next clean area of demand, I showed that to you before. There's this region right down here, and that's about 4% down. Okay, if you want to take a slightly deeper dive into this supply and demand concept, if you look below this video, you will see a link to another video that we did, and that actually gives a little further information and insight into this whole supply and demand concept there. All right, so that's a story with Microsoft. If we take a look at NVIDIA, NVIDIA right here on the 22nd or the 23rd, I guess it was the 22nd, after the close, they announced earnings, and so they knocked it out of the park here. And so, and actually the announcement wasn't so favorable, but then they obviously said the right things during the earnings call, because when it first got announced, it moved up a little, but it didn't rocket. And I think it was during the earnings call where you actually ended up creating that major gap. And then the next day, of course, when it opened, it then continued on up from there. So that's that cross right there. That's that first earnings. That's that first day of trading after the earnings announcement. Okay, so right now in terms of trading levels here, here's where we closed today at around 1,097. And if we look here above here, right here, this is a rally-based drop formation here. This is another area where supply and demand were in balance. And then notice right there that that much bigger red candle here. And that closed pretty much near the bottom of its range, about 20% or so off of its bottom. And then the next day it actually gapped up here, and then we saw another. In fact, that was today. We saw another bearish candle, and then this is that reversal that we actually saw, that you saw on the Microsoft chart. There's that same formation here on the NVIDIA chart here. So right here, this is an area of supply that's sitting at around 1137, and so that's about 3.5% above. Obviously, this is a very expensive share, so in terms of expressing a trade here, one way to do this, of course, would be to do a bull put vertical debit spread. And so one could obviously then buy a put and then sell another put to offset the price. That would reduce the premium. It would also make it a gentler trade, because one would be running a smaller delta. But that would be one way of expressing a trade on the NVIDIA here out of this area of supply. Right here, this is a demand zone here where there was an exhaustion of sellers here. Okay, and so again, when price returns here, this is where we would expect that we would, in fact, see another bounce here. Okay, and the way we would create this trade would be to, in terms of laying it out, in a sense, looking at the math and the risk reward, is here is our entry point at approximately 1051. I'm not going to worry about getting the lines here precise, but this is where our entry would be, and then we would place our stop a bit behind the demand zone here, and then we would use the average true range as a percentage of average true range, just to give the level a little more wiggle room here. And so this would be approximately what the trade would look like if you were just going to buy the stock. But then, of course, one could again buy a call or do a bull call vertical debit, a bull call vertical debit spread. And again, that would lower the price of the option position. And of course, it would also reduce the delta on it. But that would be a way one could express a bullish trade out of this demand zone here. If we take a look at Meta, okay, so right here we're actually hovering right above a demand zone here. Here's a rally-based rally formation. Notice then price rockets out of there with a great deal of energy and doesn't spend a whole lot of time in this level. Okay, so now prices, almost came back to it, didn't quite make it down. And then it rebounded again. There's that same formation that we saw in all those other symbols. So there's that rebound that we saw this afternoon. So we can see we're about 3% above current price is about 3% above this demand zone here. So this is where we would express a bullish trade on Facebook, excuse me, on Meta. So where that's about 3% above where we are now. I should say we're 3% above that demand zone now. And then in terms of where we might consider shorting, right up here, this is an area of it really there's no supply here. This is really an area of what we might think of resistance here. So one could certainly short up there, but in fact we would actually be waiting for an area of clean, untested supply. Okay, and that's right here. Okay, right here we have a drop-based drop. In fact, this is actually an earnings gap. So in fact, I actually would probably be a little more cautious about this level because of the fact that this is an earnings gap. It really wasn't created by trading. This is more, of course, an area. This is really this gap got created really by a change of perception based on the earnings announcement. So I would not necessarily expect an automatic bounce out of this area of supply, because of the fact that I think it's a little suspect because of the fact that it's really news driven and not trading driven. So at any rate, that's the story with Meta. But I think the prime level on this one, though, is if we get a pullback, I would really be looking to express a bullish trade out of this demand zone. I'm really not enthusiastic now that I'm looking at this in terms of the supply up here. So that's the story with Meta, and we'll finish off by taking a quick look at Netflix here. Okay, so here's Netflix, and in fact, this actually looks relatively similar, I think, to what we were looking at on Meta here. So in terms of where we are now, in terms of distance, right here we have an area of demand that's about 3% below where we're about 3% above that area of demand. Again, there's that rally formation. Right in here is where supply and demand were in balance. And then right here, of course, there's that sudden exhaustion of sellers, and then price rockets out of there. And so again, the expectation is when price returns to this region, this is where we would express a bullish trade. Okay, and again, one could either buy a call here, buy the stock, and again, one could, of course, also, depending on the particulars, one could, sell a bull put vertical credit spread and collect premium from here. So all of those would be different ways of expressing a bullish trade out of this demand zone. Okay, so that's about 3% below where current price is now. And then in terms of what's above here, if we go back here, and this is actually a supply zone, I think that actually got that formed quite a while ago during during COVID, when everyone was home watching movies left and right. If we go way back here, I think right about here, right there, there's that area of supply. Okay, and in fact, if we turn this, if we went from a 2 hour chart to a daily, this would actually clean up and look a lot more concise. But we can see right here, price rallied up here. Okay, and then you can notice right there, there's that sudden exhaustion of buyers here. So right here, supply and demand were in balance, and we have not been back there since. I think we actually maybe have just barely knocked on the door right there. It actually did touch that earlier this week. Okay, and then we dropped out of that. So if price returns here again, and the fact that we actually saw this drop from here, it's quite likely that if it gets back here again, you're going to see another wave of selling that'll come out of this level. So we'll be waiting for that. So that's about a little less than 3.5% above here. So basically, but within roughly 3 to 4% above or below, we've actually got some quality trading levels where we can express either a bullish trade down here out of demand or a bearish trade out of here out of supply. So at any rate, that's what I got. Thank you very much for your time. This is Mitch Firestone, and I will see you next time. Take care. Bye-bye.